Well, hello and welcome to this, the Crypto Club and Digital Assets Weekly Catch-Up on Zoom. It is Sunday the 3rd of March 2024, and today we're going to be talking about whatever we end up talking about. Typically, we talk about blockchain, DeFi, NFTs, ICOs, STOs, TGs, any of the three-letter acronyms, really. We sometimes have conversations about central bank digital currencies, or CBDCs as they're known. Some weeks we talk about stable coins, real-world assets, tokenization. So much to cover, so many different things going on. So stick around, see what you think. If you enjoy the video, do click on the like, subscribe to the channel. Even better, make comments, or ultimately come along and join us. We hold these sessions every Sunday evening, 7 p.m. till 8 p.m. UK time. And you'll find details of how to join in the link below. With that, let's see who's going to come and join us today. Hey, Gabrielle, Daniel, and Peter. Hello, everybody.
Hello, Gary.
Daniel, welcome back.
How's things?
It's good. Not seen you for a few weeks.
I know, I haven't been on in quite a while.
And Peter as well. Hi, Peter.
Hi, Gary.
And we've got Gabriella on as well. Hi, Gabrielle.
Hi, everyone.
So let's see what we end up talking about today. The market's getting really frothy at the moment. Bitcoin's been up around, nearly hit $63,000, I think, during the week. Settled around about 62.5. Usually find when crypto prices going up, everyone gets excited and gets really keen. And all the experts suddenly appear as well, which is always good fun. You get lots of people who are experts in rising markets.
Yeah, everyone's deciding that when the price is tripled, it's the time to buy.
Yeah. And it's funny as well because speaking to some people who say, oh, wow, this is incredible. Never seen the prices like this before. It's like, well, Bitcoin was 69K a while ago, and we'll see whether it breaks that in the next couple of weeks. So we'll see what happens. So Daniel, what's been going on? You've been learning about the crypto world still?
Yeah, I've been chipping in, watching all the episodes just on a Monday when I'm driving to work.
Oh, excellent. Okay.
I've usually got a long journey on a Monday, and I've been quite busy because I sat my insurance law exam.
Okay.
So I've been revising for that for the last month or so I haven't been able to come on, but now I've passed that, thank God. But to be honest, really, really intrigued just to see like how this is going to play out with the halving. And I know it's not all about price, but with Bitcoin, it's had a massive upside, and we've still got 60 days to the halving. I just think it's absolutely fascinating, like it's all happening in front of us, and how the halving may, because I wanted to hear your opinion, because I know what you said about market titles a few months ago.
Yeah, I mean, my thinking definitely is that in the past, when you've had this halving process, typically it's led to a surge in the price in some way. However, I think this time around, we're going to see a slightly different thing. The reason being, I think it's a different market to previous cycles. I think there's so much more serious capital in it now, whereas in previous cycles, it was speculative. It was, people are just into crypto, really. I think the market's widened up. And I think there's more and more institutional money gradually coming in as well. So I think, as the old saying is, what is it? Buy on the rumor, sell on the news. I think the very fact that the halving, which happens next month, is very well known, and previously the impact on the price has been very well known. Therefore, I suspect that the price that we're seeing now is already reflecting an anticipation of what's going to go on. So I'll hold my hand out and offer a prediction, and this isn't financial advice, blah, 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 but I don't think we're going to see much of a price shift this time around in the same way as we have had previously. So that's kind of a bit of a political answer to give a hint that I think it might go in a slightly different direction to previously, but I might be wrong, but I'm hedging my bets. So we'll see on that. But the more interesting thing that I think is gradually now likely to start having an impact isn't the halving for Bitcoin, because as I say, that's a known commodity and it's expected. It's more in terms of the Bitcoin ETFs that have been approved in the USA I think there's 11 of them now, because everyone saw the ETFs go live, they were all approved, and then hardly anything happened to the price. And everyone was like, didn't expect that. I thought there'd be loads of buy-ins and that. And I think I was reading recently that the way that investment schemes work in the US is that even if it's a regulated product, you can't really buy into it until it's had a period of time to actually be in the market. And I believe that's 3 months. So it could well be that the reason we haven't seen, a sudden increase in influx around Bitcoin because of the ETFs might simply be because they've been waiting for the 3 months to pass before they start putting money into it. So it could be about to get very interesting, and I suspect that might be what's leading to some of the price movements at the moment. But open to hear what other people have got. I see we've got like Stefan and Hugo on as well. Maybe they've got some thoughts.
Honestly, it's crazy how much the price went up, but I think that it might go higher. I mean, I don't think that we will see a retracement. I think it might be that we will see something like 5, 10, 20% maximum, but not too much, because there are too many people who wants to buy Bitcoin, and now they have the ETFs and they can invest normal without having to like buy over the counter how it was. And if it's true, like if the demand is 10 times higher than the supply, then there is no way that the price would go down.
Mm-hmm.
So I think it's probably just going to go up and up, but there's always a risk. Like there's a possibility to go as low as 40,000, somewhere around that price, I would say. Mm-hmm. But yeah, I'm thinking about this a lot lately.
And if I understand correctly with the ETFs as well, that they're having to, the companies operating the ETFs are having to run them as, I describe them as covered or fully asset backed. So if you buy like one Bitcoin in an ETF, effectively the provider of that ETF has to own a Bitcoin in some way to back it, or have a position where they're able to buy it. So maybe they've taken out a forward contract or a futures contract on it or something. So it's kind of interesting that it means that people buying into Bitcoins without actually buying Bitcoin could well result in a lot more demand increasing. So yeah, interesting stuff. Hugo, what's your thinking? You're smiling there.
I'm smiling because I think every time I make a prediction about Bitcoin price, it turns out to be wrong.
Mm-hmm.
But yeah, it's strange. I didn't expect I expected it to go higher a few months ago. I wasn't expecting it to go this high, as you know, in the recent weeks. And actually, the other one is the same for Ethereum. That's the other one that surprised me, how fast it's rising. So yeah, I won't make any predictions. It's just more like a thought. And what I've been thinking about this is Bitcoin. It is becoming an asset class that is, again, I think I mentioned this before. It's not as correlated with the rest of the stock market, for example, with other assets, to be more specific. So that in itself makes it interesting. In general, well, not in general, but in this case, Ethereum. I'm thinking, how is that going to impact gas fees and things like that, and so on, because I've been trying to make some transactions and use some protocols, and oh god, it's getting expensive. So that's what I'm thinking. You know, what's going to be the impact on that? I know you discussed layer 2s last weekend, or the last 2 sessions. I'm sorry I couldn't attend. So I've been playing with that as well, and so on. So yeah, that's what's on my mind. Like, okay, the prices on one hand as an asset class, but also the price in terms of how it affects usability of protocols and so on.
So it's interesting. You mentioned that just at the point at which Stefan added into the chat about he thinks ETH's going to die on the main chain. What's your thinking around that, Stefan?
Like, I don't know. I personally interact with contracts. I've done the Eigen layer and EtherFi, and I ended up paying like £250 per transaction. Like, I'm not gonna do that because £250 is a lot of money. And I personally think that the only way Ether is going to evolve is if they do another blockchain, because I don't think you can work on the main base layer in this situation, it's almost impossible. Or if they do some kind like a contract, which is kind of like a layer 2 of the blockchain, but using a contract-based system, and use your wallet only with that contract, and at the end you pay a fee for the entire transactions you've done. But like I've been in the last bull market too, and when I would use Compound, I would end up paying like £800 a transaction. An average person cannot afford this. Like if you have 1,000, 2,000 pounds, you won't be able to afford this.
So that's
Like-
what, £800 in gas fees, you mean?
Yeah. Hey, just for a transaction, £800, that's a lot of money. Like you cannot have a sustainable blockchain in this way.
I guess it depends what that transaction is. If you're a bank transmitting $80 million, then £800 is a bargain.
True.
But I agree. If you're trying to send a $50 NFT, and you know when the gas fees exceed it, completely agree. So yeah, and it's interesting. I've always suspected a concern about Ethereum is it may be a victim of its own success. And when you look at how it became like the base layer for a lot of smart contract based tokens, whether that's NFTs or ICOs or whatever, there was always this risk that the actual number of transactions going on it would increase the gas fees, which would make it unsustainable and that, which is why, you know, if you're into NFTs, quite often it'll be that you'll mint it via a platform provider, so like OpenSeas or something like that, and it doesn't actually get written onto the main blockchain straight away. So it's kind of, we're already at the layer 2 level in a way, that you're already doing transactions which aren't going onto the main chain. So interesting stuff, definitely.
Like I was thinking something about Polkadot. For example, on Polkadot, you can stake it, you get 17% interest rate. And there are platforms. Currently, I use Interlay. And you can use that stake Polkadot earning 17%. And you can, for example, borrow US dollars at 10% interest rate.
Okay.
Like, I think from a bank perspective and investments, this would probably be a big thing because you can afford to take interest rate on 10% interest rate while you earn 17%. So I think like banks would really love these kinds of projects where you earn a lot of API, and when you take collateral, you take for like 10%, and it's nothing. Like that's like a food for thought for me.
Well, I guess the problem is going to be, it's always the thing that interest rate tends to reflect the risk that's involved, and you know, Daniel will be very aware of the concept of risk pricing. And I guess the problem is that if you can earn a certain rate, you know, whether it's via Polkadot or through locking the crypto or whatever, that is in return for an element of risk that it might not work out in some way. And I wonder if they get the pricing right on that. So interesting. So I see we've just been joined by Ed. Hey, Ed. Is Ed going to come off mute? No, he's just listening for now.
Apologies, I've got my camera off because I'm walking my dog at the same time and there's traffic in the background. I'm keeping myself on mute.
No, not a problem at all. Well, welcome, Ed, anyway, and welcome Ed's dog. We did have it once where there was one person who joined us was out horse riding, so we do get a variety of things, and quite often we get people walking around Dubai, around the Burj Khalifa or something. You see in the background, so we get a real variety. So I don't know what sort of people's thinking. It was mentioned earlier on. Daniel was saying about the halving. Anyone have any thoughts about what's going to happen this time around?
As somebody said earlier, I think there's a lot of pressures. There's the expectation around the halving and the cycle, and people keeping the powder dry and waiting there with a pot. But there's also the ETFs, as you mentioned, giving pressure. There's also people now, gold. If you watch the gold price now, it's got a classic ascending triangle with a breakout looking. It's people, and we've spoken, you know, we're very uncertain times. We're looking World War III in the face, perhaps. And I think people are buying gold and Bitcoin. They're talking about a cyber attack. If you do a cyber attack, 2 targets, East and West data centers in London, You take the banking systems down, the ledger's gone, the central ledger's gone. So maybe people wanted to put it on a ledger, put it in the safe, and wait for till the EMPs or the cyber attack's gone, and then hopefully you've got something that people still want.
I've moderated a number of panels in the cybersecurity space for insurance industry events, and I always felt that I could come up with some quite creative scenarios about just how bad it could be.
Yeah.
But I go onto some of these panels and I listen to some of the insurance people who are doing like the analysis of what the risk of a cyber attack is, whether it's state sponsored or criminal activity or whatever. And I still keep coming up with a far more interesting, far worse risk, which is actually you don't do a cyber attack on the financial system. You do a cyber attack on the water system. Because if there's no water, your businesses can't operate their computers. Far simpler. So it's horrific. So we'll move on from that anyway, because I could spend a lot of time hypothesizing about catastrophe modeling and that kind of thing. So Stefan, back to you. Solar Storm.
There was a guy actually who tried a hack on a water distribution, but he was caught. Basically, he was putting some chemical substances in the water, and over the time, and I think he did this either in New York or a very big city in United States, and over the time he could actually kill people, like the entire city could have died. But what I think it's really dangerous, because it cannot be foreseen, is a solar storm. Because something like this, if it happens, I read one time that supposedly in Roman Empire they had an occurrence like that. They saw even until Italy, they start saying that for a couple of weeks they seen the sky it was always green, which means that there was like interference. If something like this would happen nowadays, I don't know if we would have many computers that would still work. And blockchain will only be a thing of the past. That's something that could happen, but we don't know ever if it will ever happen.
But it is an interesting thing if you kind of hypothesize about either a natural event like as you say, a solar storm, or a really big one which wipes out our electronic communications, or Daniel was asking in the chat about the concept of World War III. So if you have what's known as an EMP attack, so it's an electromagnetic pulse attack. Now, military equipment tends to be hardened against that kind of thing, but most infrastructure, civilian infrastructure, doesn't. So you could certainly have it where that would wipe out the computer networks that the banking system runs on, or more simply, it could impact the computer systems that the energy system runs on. So all of a sudden, you're switching off the power to the computers. Either way, you've lost your compute capability, you've lost your ability to transmit payments, to do identity, for your hole-in-the-wall machine to work, or your card payments, for your mobile phones to work, everything like that. So that's certainly an interesting one. But this is where crypto could actually come back into its own, because ultimately you could have paper wallets. If you actually get your Bitcoin as an example, you can actually print out your public and private key information, and you could actually have that piece of paper. It suddenly becomes bearer bond, that if enough people recognize it as having value in some way, then you could start trading in pieces of paper again, which at the moment we call that cash, I think, because cash is quite impervious to electrical failure and that kind of thing. So you could end up with an alternate form of cash, which is printouts of paper wallets, and you could trade in those. And this is where what it comes down to is, are there enough people elsewhere in the world willing to accept that as a payment system? And if there is, it'll happen. And that's the thing why gold's always popular, because gold tends to be a safe harbor. So to place you can go to in high risk situations, because you know that gold is generally still worth or considered worthwhile in some way, and enough other people buy it. But if enough other people will accept the paper wallet, you've now got a new money system. So it's kind of interesting. Sorry, Stefan's talking about volatility going via proximity to an EMP attack. I think we covered that. And then Daniel, you're saying what are the opinions on an actual World War III like scenario, and how might it affect Bitcoin? Some say it's a sell-off, some is safe haven. So you're right. Typically, when there is a high level of uncertainty in the world, so whether that's war, famine, conflict, whatever, and certainly economic uncertainty, you do tend to find that money tends to move to safe haven type things, whether that's property, gold, precious metals, that kind of thing. And cryptocurrency was viewed as a potential safe haven. But no one really knows, if it's impervious to certain things and there's enough of a demand for it, then if we get to the point where it reaches critical mass, where it's a recognized and accepted means of transferring value, then it could well be, a very good safe haven type thing. And as I said before, if there's an EMP pulse and it wipes out all computer networks, then that affects the traditional banking network and a lot of the crypto stuff as well. But this is where you start looking at things where if you lose the internet, for example, and that could happen either because certain nations start cutting the critical underwater cables that actually hook the internet up to each other and that. And if you wipe out the satellites that provide the telecommunications capabilities as well, and you suddenly think, well, we've got no undersea cables anymore, we've got no satellites. Well, there's a thing called mesh networks, which is really interesting. And this is where the likes of Ring doorbells, which loads of people have got these little doorbells now, which have got their own little Wi-Fi devices in or whatever. Well, you can actually establish what's called a mesh network, which is where you can get all the little IoT devices configuring themselves as a network you can communicate over. So then you've suddenly got a decentralized internet, which means if an undersea cable's cut or whatever, it doesn't actually matter. So you do have the potential. This is why decentralization is really interesting, because it does make it cyber resilient in some ways. And whether that's cyber resilient to a kinetic effect, like a bomb going off or an EMP, or whether it's a government's influence where they try and switch things off, mesh networks and decentralized systems become quite resilient to that kind of thing. So we'll hopefully not see. I usually say we'll see, but I hope we don't.
Would that include 5G towers? Gary, in Milton Keynes here, we've got a 5G tower every 100 meters, which I understand they take so much power because they're designed to be able to power the Internet of Things, like the bells and different things that require minimum amount of power.
Yeah.
So I'm just wondering if that would mean that rather than, they need power to them still. They take a lot of power, like 50 kilowatts or something ridiculous. But they're all within each other here. They don't need to go via most of them, they pick up the transmitter towers and then they put it underground to the cables.
Yeah.
But these are mesh, as you say.
Yeah. And that is the thinking around some of 5G, that it allows you to introduce mesh networks. So you've got like different devices talking to each other and transmitting the bits and bytes and that kind of thing. That could suddenly become a new transport layer for the packets of data. And that's certainly, I think, some of the conversation around 5G. Because 5G is interesting that the reason that there's so many masts is because they are low power generally. And so you need kind of like repeaters or whatever. But because there'll be so many of them and so many devices will be 5G compatible or whatever, then that means you can suddenly establish a whole new network across them. So it does provide for some interesting potential on that. But if you haven't got electricity, none of that works. So it depends how severe you want to hypothesize about a catastrophic event type thing.
Yeah, pity don't use those big towers. If you put a windmill on the top and have a windmill with 5G, they might be self-sustaining.
Yeah, yeah.
Battery
Yeah, and Stefan talks about like distance can still be a problem. It's very true because you're going to get latency issues. So the time it takes to go from point A to point B, if it's going via C, D, E, F, G, blah 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 blah. But when you actually look at the architecture of our current internet, that's already what's happening. If you know how to use a ping command to ping a server somewhere, and you see how many hops that actual packet of data takes and how many other servers it goes via and all that kind of thing. So there is still some latency, but you can kind of do that. Stefan, go for it.
What I'm curious is because in the end, blockchain can also be its own type of infrastructure. Currently, we do use it via internet because it's fast, but it's likely that in the future we can just divide it. Because I was looking, for example, like Bitcoin, there are people who use like satellites, and then they direct the satellite directly to the antenna directly to the satellite, and then they make transactions in that way. So probably people can have these type of dishes. In the end, there are ways you can protect against EMP attacks, but from what I know is that to have an EMP attack, you would need some kind of a rocket that sends a signal quite close to you, because you can't have something on like 100-mile radius, because that requires a lot of energy. So I don't know if we have something like this capable currently that would provide such energy.
Yeah.
That's one thing I'm not worried about EMPs.
So go on, Peter.
Atmospheric nuke. It's been tested. They know fly one over New York.
Yeah.
There's no civilian deaths. It takes out all the. That's something that's been muted as a retaliation for this thing with Germany with the Taurus missiles in Crimea, that they do an EMP attack over Europe.
I think JT's asking if he's in the right room at the moment. This does actually have a crypto connection, JT, because we're talking about in the event of in the event of something like either an electrical storm or a solar blip or an EMP from like a potential threat. What would be the impact on the financial system and also on crypto?
Yeah.
Just
on that same thing, I'm just noticing the Web3 distributed web. There's on Revolut, you can invest now and buy portfolio. So you go in low cost, do a portfolio. The Web3 portfolio is up something like 150% in the last couple of months.
Wow.
Half the things in there I've never heard of. And I'm just wondering if that's just all the altcoins coming up on the back of Bitcoin, or somebody's thinking ahead to say distributed web is where we need to be.
I wonder if it's the former, because you do tend to find that most of the crypto market goes up in suit with the big players. So if Bitcoin goes up, everything else kind of rises.
There's usually a lag though, Gary, isn't it? Bitcoin goes up on the halving, and then it rotates out into ETH, then it rotates to layer twos, and then into the other altcoins.
I think you're right. And that's where, again, I think the very fact that that's been a predictable thing in the past is why it's probably all priced in already this time around. And it's why we might not get it right. But, I'm like Hugo. I'm very good at predicting things incorrectly in terms of market prices and that kind of thing. I tend to get technology right and prices wrong.
Timing. It's okay, you can predict things, but when is very hard because you don't know the retardation. But it's when's the crash? When's the Fed going to go bust? It's pretty much probably going to do it, but we don't know when. It's been going to happen for the last 10 years. Can I ask something on that resilience, which is one of the things about being resilient is moving things off to cold wallets. Now it's a ledger, you might be aware. So I just come back in to check everything's still there. Go in, it's dead, battery's dead, won't connect. so I can see my portfolio. I can't transact it.
Mhm.
That's the second one. So I bought one, put my stuff in, cold wallet, didn't use it for a year, took it out of my Faraday cage inside my safe, tried it, dead. Bought a replacement, moved everything around, took my stuff off the exchanges after FTX went down, put it in, dead, second one. So once the battery goes into deep discharge,
Mhm.
it won't restart. Doesn't work. Throw away.
I've had the same. Exactly right. But this is where the reassuring thing about this is that you can simply go and buy another one, as you say, and as long as you've got the recovery phrase or seed phrase or whatever, then you can just go and create another one, because that ledger or that hardware device doesn't actually hold the crypto on it. It just holds the ability to access the crypto.
Yeah.
So in a way, it's a bit like a bank card, that you can lose or damage your bank card, but your money's still safe-ish in the bank. And you can order another bank card, and you pass the check questions, and you can access it again. So yeah, I've had a similar experience, and it's very worrying initially.
Was that with the ledger?
Yeah.
Yeah, so that's 3. That's between two of us 3. So I've got 2 out of 2. And it says on here, ledger, and on the back it says resilience by design. Now, they don't know what the word resilience means. Yeah. So resilience by design, it's some crappy hardware with 1970s gaming technology push buttons on it. That's 2 dead ones, been used 3 times between them.
Yeah, and that's where you look at some of the next gen stuff that's coming through. So I've been doing some work with a US company around digital asset custody, and they're looking more at a blend of hardware and software wallets, where you effectively have a card, so a physical card, like a bank card type thing, but it's got on it a Java programmable applet within it. So I describe it as a computer on a card type thing, and you can use that to manage the keys and do the signing and everything. And the great thing about a card is that it doesn't need power, so the battery doesn't run out. Yeah. And you can use something if you want to, like an NFC connection, so that you then have your wallet, your crypto wallet on a phone, but you've got this card that has to be within the NFC field of the phone in order for the wallet to be activated. Now that gets really interesting then, because
Tandem. Is that the Tandem card you're talking about?
Tandem do something similar, yeah, and I think Oculus do something similar as well. So our Oculus are quite big in the traditional payment space, and they're launching various capabilities. So they're quite interesting. So it looks like JT's got something.
Can I say something? You have a problem with whatever source. Well, I don't know where you bought your ledger. I haven't touched this ledger for 2 years.
Yeah.
Okay. I just connected on the power.
Yeah.
And it powered on. So you obviously have some dodgy, some, I don't know, maybe a problem with them, but I never had any problem with ledgers, yeah? And I only keep old ledgers, and I don't update the firmware.
Yeah. I was going to say that
they'll take power, so they light up, but it say battery error. So they told me.
No. Asking for my PIN.
Yeah, it asks for my PIN. It'll take the PIN, but when I connect it up to my laptop, to the ledger software, it won't read it.
Yeah, I've had something very.
They'll power up and take the PIN.
Yeah. So I've used it. Yeah. So I have another one that for almost 2 years, and I've used it like last week. Yeah, and no problem at all. So I think you might have a problem. Maybe update of the software. So if you don't update the ledger software on your computer, then it will not read it. Yeah,
I've had exactly that actually, where there was a problem with the firmware, and it just would not update the firmware. It kept coming up with an error, which meant that effectively it was bricked. It was of no use, which is why I just bought another one and did a
It can
recovery on it.
happen. Yeah, look,
Yeah,
that can happen, but usually, it doesn't happen on ledgers, and that's what I'm trying to say. Okay.
Usually, we're talking about 4 ledgers here, and we've got 3 of them, which are a brick.
Yeah.
Me,
Fair enough.
Gary, you've got one that still works. We've got 3 that don't. So you can't say usually they don't, because usually it seems they do. So there's a whole page on how to fix them, and it says update the firmware, update.
Yeah,
You
exactly.
can't, but you can't because it won't connect.
Yep.
So if you contact the customer support on Ledger, they'll take you through. It's all of them are recoverable. Okay, all of the ledgers you
First one's
have.
a throwaway. The second one's a bought, and they're going through that now. Update the software, put it on charge overnight. Blah blah blah.
Yep.
So doesn't really matter as long. Look, it's a problem if you don't have your seed. Yeah, it's like Harry said. If you have the seed, then okay, you need to buy a new one, which is.
And having been through the experience, fair play to Ledger. I found their support online to be, once you get through and you go through the chat and everything, very, very helpful, but very good. But didn't solve the problem ultimately. So they're very keen and enthusiastic, and it got to the point for me where it was like, I can keep trying these things that you're suggesting, which are getting more and more convoluted, or I can just buy another one. And
just don't use Ledger, especially after what they've done last year,
Well, this is the other thing, that there is the concern, and I'm not going to be critical or complimentary of any hardware manufacturers or whatever, but there is the concern that they introduced some stuff, and they admitted introducing some stuff last year, which kind of brings the credibility of how safe the device is, because they're suddenly talking about, as part of their recovery capability, they can offer a service where they can recover the keys for you. And that's where they suddenly admitted that actually they kind of had a back door all along that they didn't mention about. It's like, that feels uncomfortable.
It's a bit different from that, Gary, but yes, you're on the right track. So what they've done is that they are splitting between, I think it's 3 different partners.
Yep.
Okay. So that means nobody has access to it. Yeah. But if law enforcement comes and say, hey, the guy that has this crypto on their ledger, I don't know, it's a Russian criminal or a London criminal, whatever it is, doesn't matter. They can easily, if there is a justification for it, like a court, that says they can actually confiscate the crypto. So they basically just get the 2 other partners, to provide the split key, and they can actually then retrieve all the crypto from your wallet without your permission.
So
just protest in Canada.
Yeah. So there is about to be a really interesting thing for those who are in the UK. There is about to be a piece of legislation that's being introduced by the UK government. I think it's scheduled to be live and effective from April of this year. I can't remember the exact thing now, but it's something like the Economic Crime and Transparency Act. But that includes legislation enabling law enforcement agencies to seize crypto if it is suspected of being involved in criminal activity. So here's the thing, that it means you may potentially have crypto taken off you by the police, even if you haven't been arrested and even if you haven't been prosecuted. So just like with other assets, you're a big boy criminal and they seize your yacht or your airplane or whatever, and they can do that without actually having prosecuted you, but they can seize it on the basis that they think it might be funds related to criminal activity. Then they go through a court case and that they do have the ability to seize the crypto. Now, the slightly different thing is that they've introduced the right to seize the crypto without you being prosecuted and liquidate it. this is where I think there's going to be some really interesting cases going on, where you could have a situation where someone is suspected of committing a crime or something. The Bitcoin is seized. The agencies don't really know how to store crypto, but they do know how to store pound notes and dollars and that kind of thing. So they could seize the Bitcoin, convert it to cash, and store it. And then the crypto price goes up. And then they decide they're not going to prosecute you and return your funds, but it's now worth an awful lot less. That's going to be really interesting, because that means that you've suffered a financial loss of which you can't prosecute the police for doing that because the legislation permits it. Sorry, Stefan, you got your hand up again there?
Yeah, like I had something similar, but not from the police. It was an accountant. Technically you can, but you definitely need to spend a ton of money. I heard about this case. There was someone in this country, in UK. He was like somewhere from the royal family, and his family who died, like grandpa, he left like a couple of millions of pounds in assets, and they didn't really wanted to spend the money. And they actually linked somehow that this person who died was hit by a shell in a World War II, and that they died of cancer because of that shell. So technically you can, but for us who are poor and normal people, we will never be able to do that. Like that's something I'm afraid, and I'm really worried about this.
Yeah, there is so much on that. Sorry, go ahead.
Also, I wanted to ask about Ledger. I also had a problem in it one time, and they said that if something happens with my Ledger Nano device, they can always just send me another one, and they said that I get guarantee for life. So like if something happens, like I was thinking that if the battery dies, why didn't you just call them and ask for a new device for free?
Yeah, the first one I couldn't do it because I had to show receipts, and I bought it in time.
Oh, I see.
Second one, they're going through that now with charge it, update the firmware. As Gary said, you go through about 2 weeks of this where you've got to change operating system, take your VPN off, all that stuff, and then they say send it back. We'll give you another one. I hope.
Yeah.
But it's I'm not. It's meant to be your safety in my safe in case, and you pull it down, it's dead. It's so I'm thinking, what are the alternatives? Because I don't want to put it back on the exchanges.
Well, your alternative is get your private key and print it out.
I've already got that.
And then just leave it as a certificate on the wall behind you, and then we'll zoom in onto it, and then someone will. And this is where it does get quite silly at times. I have seen cases of people saying about how they were nearly hacked, blah blah blah, and then they'll share some quite detailed information, which allows the hacker to then go off and do something again. I saw it a few months ago. There was an interesting. There was a TV news interview of someone in the States who'd been hacked and they lost $1 million worth of crypto. And they were saying...
Sorry to interrupt you. Are you talking about Ian Ballina?
I don't think it was. No, it wasn't Ian Ballina. It was a couple, because what I found really funny, and this is funny in a bad way, was that they were saying about how on a particular date, this cyber attack had happened on them and they'd lost their crypto, blah, blah, blah. And they were sharing all this very detailed information that if you were a hacker, you could then turn around, get their details, because they were very public about it, because they also showed their Binance account on their computer. It's like, great, okay, so I can now get in touch with them, claim I'm from Binance. Hi, it's Binance support here. We saw your problem. We'd like to refund, blah, 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 and we know that on this date, this transaction happened. So it sounds very, very convincing. And then they'd give away all their private information again. So it's just, there are some things, which is where, I mentioned I had problems with Ledger, but Ledger's not the only hardware I've got. So I find it's amazing how casual people are about their personal security. And so even by saying, it's a bit like people saying, oh, I've got a Revolut card. Well, great. You've just introduced yourself to some social hacking of someone emailing you to say, hello, it's Revolut here. I'm following up with a problem with your card. Please click on this link. And this is where I try to tell people to be sensitive with what information they share on either online or in this call or whatever. Because as soon as you start saying, well, I had a problem with my Binance account, straight away, you've now introduced a threat vector of admitting that you've got a Binance account. But I found this for years, the whole crypto market, people are just so casual with sharing their information. And it used to be that people would say, oh yeah, I've got 0.7 Bitcoin in my wallet now. Well, that's a bit like broadcasting. Well, I bank with HSBC. I've got £35,000 in the account at the moment. Suddenly you go, hello, come and hack me. So anyway.
Even worse than that is the same as saying I have £100,000 under my pillow in my bed at home.
Yep. Yeah.
Which is home. Yeah.
And it's my home, which is a flat in Clapham that I'm registered to. Oh, and by the way, I'm going to the blockchain conference in Dubai next week, and my house is going to be empty. Yeah, I agree. Sorry, Alina's smiling there. Alina, you got anything to add here, or are you just enjoying the pain of other people?
Absolutely enjoying it and feeling very happy that I've never got to experience it myself yet.
Yeah, and yet is probably the thing. The reality, it's a bit like there's a joke in the cybersecurity industry that what was it? Something like 80% of companies know that they've been hacked. The other 20% don't. Yeah, and that's it. Every company is being hacked. Every company is being hacked. It's just that some know it and some don't. And I had a conversation with someone a while ago, and he was sharing what happened to him, where he got hacked on his phone. Classic social hacking initially of an email saying, "Oh, hello, it's Binance here," or whatever. There's been a problem with your account. Please log in to change the password immediately. Click on this link. And he didn't think twice. It looked like it said Binance.com. Sure enough, it was a phishing site. He logged in, and as soon as he logged in, he thought, "Oh, this doesn't quite feel right," and logged out straight away. Then logged in properly, i.e. by typing www.binance.com or whatever. And he said he logged in just in time to see his 8 Bitcoin disappearing. So that was a few years ago now. But 8 Bitcoin, $60,000 per Bitcoin. He said that was a very painful experience. So the thing. So Daniel asks, is there an insurance product for theft of digital assets? But very, very timely. So yes, there is. So there are a number of companies who now offer crypto insurance. It's still relatively small. There are a number of brokers that are in this space. So you can check out, there is a CoinCover, was the first, I think, Lloyd's of London accredited provider. So that they've got agreements with a couple of Lloyd's of London underwriting syndicates. And they actually established a crypto insurance product. But usually when you read a lot of crypto insurance literature, it's still very much physical world based. So that if you look at the proposal forms, I've done this with a couple of brokers lately, they're still talking about physical protection of, where is the computer based? What is the security on the computer? And it's as though that they're still thinking of it as like your crypto is on a computer, in your home or whatever, when actually it's a private key that gives you access to the blockchain with your crypto. So CoinCover is one of the companies who's certainly in the space. There's another company called, I've forgotten the name of it now. but there's definitely a couple of others. There's Lockton's Insurance. The Lockton's are a broker that they've got a whole digital assets team who are growing and developing propositions in this space. I'm trying to remember the other big one that I've sometimes mentioned in the past. But so there are some insurance companies who will provide it now, but be mindful that quite often that they still think of it as a cyber insurance risk. And you've got the whole thing of checking out if your Bitcoin's stolen, does the insurance policy refund you in Bitcoin, or does it refund you in the value of the Bitcoin at the time at which it was stolen? Because that can be quite a big difference. So name of the other company was Superscript. I remember now. Superscript got a great team of people who are very crypto savvy. I think one of their people joined recently from Elliptic. So Elliptic, very big in the crypto tracking and tracing type space. And one of their other guys, Ben, really knowledgeable. You'll see him at a lot of conferences talking about crypto security and crypto insurance, that kind of thing. So there's a few links just gone in there. What's this about, JT?
Open the last one. Yeah.
See, this is I talk about not sharing links and opening links, and JT now starts sending me hyperlinks to open.
Ones. I've checked them. You know I don't do that.
Yeah. Okay.
So this last one basically has the recordings of Vitalik with the super duper lawyer that at the time was trying to help them to get out of huge problem in Ethereum. Yeah, so if you go down, you press the play button, you can hear the entire conversation of Vitalik with Steven Nadoff. Yeah, it's
okay.
When Ethereum, I mean, it's all there, and the transcripts. You download the transcript, both of them. It basically the SEC has no option but to qualify this Ethereum as a security.
Yes.
Okay. Be very, very careful. Be very careful if you have large volumes of Ethereum or any significant Ethereum, because once you go through these, well, it could well be that they just ignore it. It is money talks, but I don't know. There's some things there that they say. It's quite astonishing that it hasn't been classified as security yet.
Well, they did kind of get a get out of jail free card a few years ago with the SEC, didn't they? I seem to remember.
Doesn't matter if there is no proofs.
Yeah.
That was Hinman. that all came out, Gary.
Yep.
That Hinman speech, it all came out in Discovery with Ripple.
Yep.
So they're going to come back to it. So the only non-security in the crypto world is XRP. Through trial. They said
for retail.
Well, they say that it in itself is not a security.
Well, isn't there still a trial going on? Because the whole SEC versus Ripple actually involved multiple things.
Yeah, it is, because they sell billions of dollars in total.
It's the initial sales. It was the direct sales, the programmatic sales.
Right.
Happening now, that's not a problem. It was when they raised. They basically did an IPO, did an ICO, and they cashed some stuff. So they're going to get a fine for that. But what they're doing is, how come XRP was the number 2 crypto before they hit it, and then it's down to 7 because banks aren't touching it. But that leads on to something which I think the ISO 20022.
ISO
20022. Yeah.
Banks don't need the XRP. Okay, banks don't need XRP whatsoever. They have some of them. Actually, there is a misleading, and they can be done for that as well, because there's proofs of screenshots, blah blah blah, history, where they were saying all of these people are using XRP. No, they're using Ripple.
They're using Ripple.
Yeah, XRP was only used by 2 services for payment transfers, and they're not very big, And I think MoneyGram was one of them, and they canceled the partnership with them. Yeah. and they were still going around. So XRP is not needed for anything for payments settlements. It's the Ripple that some of the banks were using, and still are some of them. Yeah, but they don't like it, so they moved away from it, and they are most of them in R3, as you know, Gary. So a lot of the financial institutions have moved to R3. Corda, isn't it? It's called.
Yeah, well, which is interesting. So just quickly, Peter mentioned ISO 20022. So this is a new standard, which it's a little bit harsh to describe it simply as a payments messaging standard, but that's ultimately what it's around.
Yeah.
And so ISO 20022 introduces some standardization around payments messages and how they work. There's a load of stuff on Swift's website. So Swift, who do a lot of the interbank stuff, where they've got I think it's about 42,000 computers linked up together and that to do payments of traditional money. Now, ISO 20022, which is around payments and exchanging financial information in the traditional markets, so dollars, pounds, or whatever, is also being extended that there are some cryptocurrencies that are also ISO 20022 compliant. So XRP, as you mentioned, is one of them. Stellar Lumens, so XLM, and a couple of other X-type cryptocurrencies. I think XDC might be one.
XDC, Quant, Algo, Ethereum, HBAR, and IOTA.
Yeah, and these are all ISO 20022 compliant crypto tokens. I guess they have to be, because they can't be cryptocurrencies per se. So yeah, this is where a lot of people are saying, oh, the ISO cryptos are going to take over the world, and it'll be the replacement of Swift and all that kind of thing. And actually, it isn't. It's just an additional type capability.
Well, it is where the BRICS go. Russia's kicked off the SWIFT now, so BRICS is now bigger than the G7. What are they going to use?
Yeah, and that's certainly been the conversation we've said about the BRICS before. So for anyone who doesn't know the term, it's the grouping together of Brazil, Russia, India, China, South Africa, and then it's recently been joined in January by Saudi Arabia. Is it Argentina?
Argentina came out. Saudi, Emirates, Egypt.
There's a couple of other either African or Middle Eastern type things. And what it means is that from a global economic contribution perspective, BRICS as an alternative is getting bigger and bigger. Yeah, South Africa was that was what letter S was in BRICS originally. They've been in for a while. And so there is certainly talk about, well, does that start destabilizing the US dollar or the petrodollar being like the world's reserve currency, and that? Who really knows at the moment? Be interesting.
That's one part of it. But in terms of the SWIFT, Gary, if Russia's off SWIFT and they're all trading with each other, they've got a SWIFT replacement, and they're doing currency-to-currency transactions now. So basically an automatic market maker with something as a bridge. Yeah. So when we say SWIFT is dying, well, if most of the world isn't using it, and it becomes a NATO plus system, doesn't it?
Well, it comes down to the whole thing of saying, oh yeah, they'll get rid of SWIFT, but SWIFT is actually owned by the banks.
Yeah, it's not by the Western banks.
That's right. So all it is, it'll still continue, but it'll be a Western banking system as opposed to a non-Western. Yeah.
The IMF and the World Bank, they've been displaced now by the BRICS Bank. But just interesting with the dates, because it's scheduled for the spring equinox, 20th of March, which is all big things happen on certain dates, which is the same date as the Fed rates announcement as well.
Okay. We'll keep an eye on that then. 20th March, something to watch out for. See if it comes out.
It's the release of the Three-Body Problem, the science fiction series on Netflix.
Wonderful. Stefan,
the world being invaded
I actually had two questions. You were saying about as long as you keep your private key, that's fine. But if I know correctly, you don't need just the private key. You also need the file with access with the private key, because if you don't have that file is lost, your private key is nothing. So I know that, for example, like with, I think it was with not Ledger, the other company, Tezor, they had their file, it was saved on the device, and you could access the file, and then you didn't need the private key. What I was thinking is, sorry?
No. If you've got the private key, or
Yeah.
alternatively, if you've got seed phrase, which allows you to recreate the private key, and then you get a crypto wallet, you know, whether that's a Ledger or a Trezor or whatever, and you put that private key in, that will then allow you to digitally sign transactions, which is all you need to be able to do. So that's to the point at which you can transfer funds around. The Trezor one, I think the file was just something that was something else to do with the security.
So if, for example, let's say I have, I know, like my Ethereum, and police comes after me, and I have my paper with my Ethereum private key, and nobody has it, then I can always get it back, right? There's no way for someone to go to MetaMask and say this wallet, block it. They can just see the wallet online, but they'll never be able to, I don't know, block my transactions or suspend my wallet or take the money, right?
So they can't do that with your wallet, but what they can do is that the law enforcement agencies can notify the exchange providers. So they could say to Binance, to Coinbase, to whoever, this is a blacklisted wallet, and this is what already happens with some sanctioned wallets. So some sanctions. Yeah. Sorry, I just realised we're getting into such an interesting conversation, as is always the case with these calls, that it gets more and more interesting as we get later and later. But I have to close the call off now, I'm afraid. Peter asks about, very quickly, can you get exposure to R3 Cordana? So it's Corda is the actual protocol. R3 is the company. I think R3 is all privately owned because it was New York originating type thing. So I don't think you can get shares now. I think it's all privately owned.
Yeah, it's more of a DLT than actually a public chain.
Yeah. So folks, really sorry, you're going to have to close the call off. Thank you all for the interesting insights. Elena's obviously enjoyed it because that's what is that kind of thing. So I hope everyone enjoyed it. Hope we managed to cover everything. Hope anyone watching afterwards finds some value out of it. Come and join us next week. Have a great day, folks.